I just bought a $500,000 software business in an industry I know absolutely nothing about. Today in this video, I'm going to break down the exact buying process, what I went through to buy this deal, how I structured the actual deal, and my plans to 5 to 10x this business profit over the next 12 to 24 months. So stick around at the very end because I'm going to show you all the things that I've learned from doing this deal, what you can take away, and why I actually went ahead and decided to buy a $500,000 business in the end. And essentially, I'm going to share everything in between. Today, I'll break down the 3 stages of buying a business, how to actually find and structure the deal, and then how I plan to grow this business over the next 12 to 24 months. Now, before buying any online business, there is a ton of work that goes into the process. So for this specific deal, I am consistently looking at businesses on a daily and weekly basis to find new deals. This is essentially a deal that I was looking for somebody in my buyer acquisition program. It wasn't a personal good fit for them, but with my skill set and with a partner that I have for this deal, it made it too good of a deal to pass up. And then we essentially found this deal through a company called Empire Flippers, who is a business that I helped build from scratch, and I still work very closely with them to find some of the best deals out there. Now you're probably wondering, why would anybody in their right mind sell a business that's generating $12,000 a month in profit, only requires a few hours of work to do to maintain the business? And a lot of times it's going to come down to a few different reasons. Number one is they're just tired of the business. They want the lump sum of money and they want to focus on something else. In this specific deal, the person was expecting a newborn child, wanted to take some time off from working to just spend with their family. A lot of other common reasons that I see for sellers to exit their businesses are they have other investments that they're getting a higher net return from. Maybe business A is generating for $1 that they put in, they're getting $5 back, but they might have another business that they're putting in for $1 they put in, they're getting $10 or $20 or $30 back. So they can sell this business, focus the capital and the time to put it into another business that's generating a lot higher return. Now, the last scenario that I see for somebody to sell their business is they have something going on in their personal life. They need to buy a house, they're having a medical emergency, or they're going through a messy divorce and they just need some sort of capital. Right now, what I'm seeing a lot happen is people are expecting the recession to get worse and they're essentially selling off their business to get a big lump sum to help them over the next 2 to 3 year period. Whereas people like me can invest and buy these businesses and essentially start generating cash flow from day one of the acquisition. So some of the common issues that I personally experience when buying businesses has been, one, to just find a business that fits the capital that I have and also is going to be a business that I see growth potential. These are the 2 main things, and the issue with software businesses is there's not a huge amount of inventory in the $200,000 to $300,000 range. The $500,000 range, there's not a lot of options. So it can take a few months to find a deal that's going to be a great fit. And with this deal in particular, it just so happened to be the perfect timing, the perfect price, and the perfect structure for me to acquire this business and start growing it over time. So one of the reasons I decided to buy a business was I was looking at all of my investments over the past 5 to 10 years and seeing which one of these investments outperformed each other. I looked at stocks, cryptocurrency, buying other online businesses, and time again, my acquisitions have 10 to 1,000x outperformed any other investment that I've been involved in. So I wanted to, 1, get cash flow, and 2, diversify into another online business that I've seen a lot of success in. So I've noticed that this is just the highest return on my investments. And instead of getting 5 to 10% in the stock market, I could sell those assets and put it into a cash flowing business that's going to generate monthly cash flow for the foreseeable future. So the due diligence process for buying an online business is very in-depth, and I've actually made another video about breaking down all the steps for due diligence, but the main things that we looked at for this business were the search engine optimization, looking at the link back structure, how is traffic actually coming to this business? So we dissected all of the areas for that. Number 2 was the financial discrepancies, reviewing the P&L, and asking particular questions about what these expenses, what these profits are, and essentially diving deeper into the financial statements to figure out where they're at, where they're going, and how we can expedite the growth for the business. The third thing that we did for due diligence on this business is we hired a developer to review the code of the business to make sure that everything was up to par, making sure that there wasn't any big gaping holes that maybe we missed in the business. Since I'm not a coder and since my partner isn't a coder, we essentially wanted to have a third-party expert review the code. And I think during the due diligence process, if you don't fully comprehend how the business was made, it's worthwhile to have a third party come on to call, review the code, and it's not super expensive. This can be between $50 to $100 per hour. And now the last thing that we did for the due diligence was just talking to the seller, learning about how they built the business, digging into why they actually want to sell the business, because a lot of times they'll say one thing, but you really need to get a better answer from them on why they're actually selling it. And then we asked dozens of other questions to just learn more about the seller, how they built the business, how it became profitable, and kind of the plans for the future. If they were going to continue growing the business, how would they go about doing that? Now, the second part of the buying process is the negotiation stage. This is essentially when you finish doing your due diligence, you're ready to make an offer and start negotiating. Essentially, my partner and I, we outlined about 5 different scenarios where we were going to accept these sort of deal structures, but we would start sending deal number 1, see if that got offered. And that first deal that we outlined was about 70% of capital up front with the rest in a seller financing earnout scenario. That first scenario was rejected, and we were able to kind of figure out where they were looking at to walk away with this amount of money over this period of time. So we renegotiated, sent over our second offer, and luckily that offer was accepted. And this was a percentage of upfront capital and then the rest of that capital over a period of time in an earnout. So this is essentially seller-free financing, which is an interest-free loan from the seller. An example like this might be you put up $400,000 of upfront capital and then $100,000 over a 12-month period of time, and that's tied to 12 monthly payments. But we decided to tie these monthly earnout to sort of stipulations, and I'll get into a little bit more on that later. So essentially, we structured this offer with a percentage of upfront capital and then a 20-month earnout. Now, it was about $90,000 to $100,000 in this earnout, and it wasn't just a set period of time. Now, we saw some very key changes to start growing this business, and since the developer had been working on it for the past 10 years, we decided to get creative with our earnout structure, where we had about 10 stipulations that the seller would have to implement before the earnout started. So essentially, this earnout would not start the payouts until all 10 of these items were completed. The seller agreed to this, and essentially, over time, they would need to make all these changes before the earnout process started. So the way we financed this deal was just primarily with using our own funds, utilizing upfront capital, and then a combination of seller financing, which is essentially the earnout structure we talked about. So this would be the scenario where it's $400,000 of upfront cash and then $100,000 over a period of time. And luckily on this deal in particular, the seller decided to walk away from the earnout, which is a very rare thing to happen. Most people don't want to turn down an extra $100,000, but because of some of the stipulations, he just did not want to worry about the business over the next couple months and decided to walk away and turn down that extra $100,000. So we essentially got a $100,000 discount on this deal just by that earnout kind of being negated. Normally during this stage, there's first off a letter of intent and then an asset purchase agreement signed. A letter of intent is just showing that you're interested in the business. It doesn't mean you have to buy it. An asset purchase agreement is usually when the final offer has been accepted and you're essentially relied on to buy this business. So after you sign that asset purchase agreement, it's going to include things like the trademark, what's included in the earnout process, all the website domains, and kind of the expectations for both parties. So after you've kind of signed the asset purchase agreement, it's more or less a done deal. After that APA or asset purchase agreement is signed, you're going to move the business into the migration process. And depending on if you do a private deal or with a broker, they might handle that migration process. where the funds are being held in escrow, the business is being transferred from the seller to the buyer, and then they're going to make sure that the business is actually fully transferred, all the money is coming to your account. Normally this process takes between 2 to 4 weeks, but it really varies on how active the seller and buyers are going to be, and then also how complex is the business. Because this is a software business, it took a little bit longer for us to transfer the business, but overall it was a fairly seamless process. So now the business is off to a really great start. Within January, with the earnout being canceled, we were able to essentially gain $100,000 off of our debt. The business is outperforming last year by about 20%, and we haven't had any huge implementations of growth plans yet, but we have a really strong growth plan outlined that is potentially going to 5 to 10x this business over the next 12 to 24 months. So the business has organically grown on itself about 20. And so if we did nothing in the future but let it grow, it would just keep growing over time. But we have about 4 to 5 key things we're going to implement into this business to make that growth a lot more exponential. On this path right now, if we don't make any changes, it's going to take us about 20 months to get our initial investment back, and then we'll just be netting around $12,000 to $15,000 a month in profit. But we're planning to grow this business to earning $30,000 to $50,000 a month, and this is going to be the ways that we're going to do this. Now, the number one way we're planning to grow this business without investing any money is just by changing the prices. The current seller hasn't changed the prices for more than 10 years, so we're planning to increase the prices, which is essentially going to give us a big bump in net profit. The second thing we're planning to do is turn from a one-time yearly fee that is not auto-recurring into a monthly recurring fee. So every month we're going to be creating monthly recurring revenue, which is MRR, instead of ARR, which isn't set up right now to be automatic. So setting up the automatic billing is essentially going to be like, right now it's set up, imagine having to go in every month, click a link to pay for your Netflix. Now we're going to have it where it's set up where it's every month it's just automatically charging your card. And this is going to greatly reduce the churn rate, which right now is around 25 to 30%. And we expect the increase of prices, the reduction of the churn rate, and the automatic billing, all to greatly increase the net profit that we're receiving every month without having to generate more and more traffic. Now, let's say, for example, you have a $500,000 real estate investment property, and then you have a $500,000 online business. It's not nearly going to generate as much capital in the real estate property, and there's going to be a lot more work involved, a lot more hours invested, and your margins are going to be a lot lower. Normally there's going to be some sort of maintenance that you need to do before you get people moved in. So from day one, you're already generating cash flow, and then it's very easy to scale that type of business, where I've scaled businesses 5 to 10 times in a matter of 6 to 12 months, where with a rental property, it's very hard to 10x a rental property, and it's almost impossible. So this business, with our implementations, I think within 6 to 12 months, we will essentially 5x the income of this business with all these changes we're planning to implement. And then with a longer strategy, we're planning to do things like SEO, increasing and adding more content to the business, and doing a number of other creative marketing strategies. Overall, buying an online business has netted me the highest return in any investment I've ever made between crypto, stocks, any type of things that I've seen in real estate happening with friends and family. So for me, this is just going to be the thing that I continue investing in. And if you're hesitant to get started, I help first-time buyers just like yourself find the right deal, structure the deal, and then implement a growth plan. So if you're interested in something like that and working with me, I'll leave some details below in the description. You can set up a free buyer consultation with me. These are very limited, so make sure you try to book them as soon as possible, because over time, I'm just gonna have to turn these off because a lot of people are reaching out to me to join this program.